Small Cap Fund Manager Steve Palmer answers your questions in a feature we call Ask Steve. This Small Cap Power exclusive puts our viewers in direct communication with one of the top fund managers in the country. Mr. Palmer is the Chief Investment Officer at AlphaNorth Asset Management, whose flagship AlphaNorth Partners Fund has annualized returns of 17.4%. We hope you enjoy this latest edition of Ask Steve. Welcome, Steve. So what's in store for the TSX Venture equity markets as we approach the final stretch of the year?
I think the Venture Index will be very strong into the end of the year. One exciting thing about the Venture is with the volatility, it can make very strong moves in a short period of time. For example, in 2010, or a 6-month period, it was up 65%. And I think we could see something similar this year.
Can you tell us a little about your small cap funds? We see that the AlphaNorth Partners Fund has annualized returns of 17% since its inception.
We're very proud about the track record of our AlphaNorth Partners Fund, particularly given the very challenging environment for small caps over that period of time. Our fund is up over 130% since its launch, while the TSX Ventures declined by about 65%.
So what are the advantages for investors getting exposure to small cap funds rather than picking their own individual small cap stocks?
Well, with buying a small cap fund, it's less risky because if you just pick 2 or 3 stocks on your own, if one doesn't work out, it can have a big impact on your portfolio. With the fund, you have the diversification. Most funds have over 30 investments in the portfolio. And also funds typically have access to a lot of private placements that retail investors don't have. And so by buying a private placement, you often get the stock at a discount and you can pick up a warrant for free.
We recall back in 2011, your outlook stated that equity markets would set new all-time highs. When you made that call, you were seen as a bit of an outsider. What gave you the conviction to make that prediction?
Well, I've done a lot of work on studying market cycles and technical analysis. And we made the conclusion at that time that a lot of the issues in the world were very similar to 1998, and the technical work that we did also showed a similarity. So we put out a special report in October 2011, which made the case for much higher equity markets. We looked at the S&P in this case, and fortunately that call's worked out.
In your interview with us last spring, we talked about how the broader markets had gone up significantly, reaching all-time highs. We also talked about the big disconnect in performance between the US and Canadian markets, mainly caused by the disproportionately large resource component, which dominates the Canadian markets. Your outlook at the time was that resources were oversold and that they would rally over the remainder of 2013, causing Canada to play catch-up. Has your outlook changed since then?
No, I still believe this. We're starting to see this outperformance. The TSX has outperformed since June. And in order for the TSX to outperform, we really need strength in the resource component of the index. The energy sub-index has broken out to new highs, and the materials index is showing signs of a bottom.
We previously also talked about one of your favorite names from the AlphaNorth portfolio, a technology company called BMS Technologies. At the time, it was trading at around $1.30 and has since performed very well, up over 50% to approximately $2.70. How long have you owned this stock, and have you recently added to the name?
We've held this investment a long time. We first purchased it in 2008. Our initial cost was around 40 cents, and we accumulated more shares over the last several years, mostly between 35 cents and 70 cents. We like the growth prospects for the business and the new management team, and we still think it has lots of upside potential from here.
Do you have any new favorite stock picks for our viewers that you hold in the AlphaNorth portfolios?
Spectre 7 is one that we've added recently to the portfolio. They make computer chips that make electronics run faster, clearer, and lighter. These chips are used in the new 4K TVs, and they have several other products that are launching over the next few months. We believe that revenue could ramp significantly in 2014.
Finally, any last words on why you are so bullish on small cap Canadian equities, and how can investors benefit from what lies ahead?
Small caps have dramatically underperformed over the last couple of years, while the large cap indices have done quite well. We believe this divergence can't continue, and we've recently seen the large cap index, the TSX Composite, break out to new highs above 13,000. For the previous 2 years, it was in a trading range below that level. October will be the 4th straight month of positive returns for the TSX Venture, and we haven't seen 4 positive months in a row since prior to the peak in 2011. Over the longer term, we like the small cap sector because it's the best performing asset class over the long term, and we think the opportunity today is exceptional given the poor sentiment and the strong pullback we've seen in many of the companies. So investors who buy today are definitely not buying at the peak.
Thank you for taking the time for the interview, Steve. We really appreciate it.
Thank you very much.
Don't forget to subscribe to our daily newsletter for more of these expert interviews, CEO videos, daily stock picks, exclusive research, and investment ideas. SmallCapPower.com, investment ideas and research.